What's your sense about what the Fed can say and do and the implications thereof?
It's a great place to start because that is the topic of conversation among many clients here. This is the week. The good news, Neeraj, is that the talk about a global recession has not played out. So the worry, remember, 2 months ago was the US would slip into a recession, hit by the supply side shocks of higher inflation, and consumers would be hit on both sides. Higher inflation that squeezes purchasing power and tighter monetary conditions that the Fed was engineering. And that would push the US economy into recession. That hasn't happened because there's been more resilience. We've seen, remember the US consumer came into this year with massive excess savings. Corporates had large, strong profitability, and they've been able to withstand these shocks. That's the good news. The not so good news is because the US is not going into recession, the Fed will not get the kind of disinflation that a recession would have ordinarily brought about. And you saw the last CPI number was ugly, the US CPI number. Yeah. Core CPI month on month at this stage increasing 0.6%. Let's hope it's an aberration. But the Fed can't be hoping at this stage. So what we think is going to happen is you'll get another 75 basis point hike this week. 3 things. Number 1, that's the hike this week. Number 2, there's a good chance that when we get the dot plot, that the Fed is going to signal that the terminal rate is now above 4%. We think it'll be 4.25% for now, and it could go up later. But more importantly, I think there'll be a strong affirmation that no rate cuts are coming in 2023. Remember, markets are still pricing in rate cuts. So that's the other shoe waiting to fall, that markets need to reprice out any rate cuts. So it's a pretty somber message. The worry is we avoided a recession this year in advanced economies, but now central banks in those economies may be forced to engineer a recession in 2023 to disinflate and meet their inflation targets. And so to sum it all up, the worry is emerging markets are faced with this trifecta. Higher rates from the Fed, from the ECB, from the Bank of England, the strongest dollar in 20 years, the DXY index, and still elevated commodity prices. Down from 3 months ago, but oil is still above $90. And it's the trifecta that will keep emerging markets awake at night.
So every problem that we've seen in the last 12 years or post 2008 was solved with more money thrown in. Do you reckon this time around the central banks, by virtue of facing the problem of inflation for the first time, will now have to contend with not taking that step? And is therefore the outcome of all that's happening uncertain at best and ugly at worst?
I think that's a very good way to characterize it. I think central banks will be far more wary because there is a salience to inflation. There are 2 or 3 generations of Americans and Europeans that have been brought up with 2% inflation and don't know any better. Now, for the first time, you're living with 7, 8, 9% inflation for 2 years. And the question is, does that kind of unhinge your inflation expectations in an environment where demand for labor is so strong? For every worker, there are 2 openings. Workers have bargaining power. There are attempts to unionize. So the worry is you may get into a wage price spiral. Right? It's such a tight labor market that workers may demand higher wages because they can, but those wages are still negative in real terms because inflation is higher. So you will demand higher wages. US productivity growth, at least measured productivity, has collapsed in the first 6 months, which means from a firm perspective, unit labor costs are going up even more. Right. Because wages are going up and productivity has come down. So now they are under pressure to raise prices. And it's this wage price spiral that will worry central banks and force them to front load tightening. But you're right, I think this will be a wake-up call that, this notion that we got kind of lazy with, that you can just keep throwing money at a problem and there'll never be any implication, that you can run whatever large fiscal deficits you want and there'll never be a problem. I think there's a rude wake-up call to that thinking, and hopefully going forward, policy orthodoxy, will become the norm.